Hmm? So looking at business what? Business mathematics. Now we have different categories we deal in. One is the one of profit and loss. I think you know those ones. Profit and loss. When I tell you something is either appreciating or depreciating. Then you also look at either appreciation or the and what? And a depreciation. When something is depreciating, losing value. When something is appreciating, it is gaining what? Value. One of the things that appreciates mostly is the land. Is what? Land. And this one is maybe these temporary assets. Maybe furniture and the rest.
Yeah. Hello.
So, yellow. So I was talking to someone. Okay. So one thing that depreciates, we can look maybe at current assets. The current assets we look at here, and maybe the cars. Cars can easily lose value. Maybe TVs can lose value. Maybe fridges and so on. They can easily lose value. But land is one thing that can easily appreciate. It doesn't lose value. So then other one we shall look at is taxation. So this is what you're going to look at today. Taxation is also part of business math. Now this one normally is catered for by the government. This is by the what? The government. Because the government is done with come and tax you, charge you. The body that governs that is URA. That's the body that governs that. Do you know URA in full?
Yes.
Is Uganda Revenue Authority, So it's the one which will govern the what? The taxes. So then we come to now, we shall look at now taxation in details. Then also the part we shall look at is one of maybe, do you know this one in full? Have you ever seen this formula somewhere? PRT.
Yeah.
Which is the same as, which is equal to the simple what? Simple interest. Or so we shall also look at what you call the simple interest. Simple interest and the amount. And the what? The amount. So all that is business math. Where we have the principal, P is the principal. Also. Then the other one is the rate. So principal, then R is the rate. This is the time. So principal, rate, and time. So, but our main focus now is about taxation. It's about taxation. So, taxation. Okay, should we continue? So we are going to look at taxation today. So taxation. Now, when I say taxation, what should come to your mind? Do you know what they call Omsolo? Do you pay taxes?
No, I don't, but my parents do.
Why do they pay taxes?
I'm not sure.
You don't sure why they pay taxes?
The government.
Okay, the government charges them also, because when someone pays taxes, that's the money they use to construct hospitals, government schools, all that. That's the role of taxes, to pay the social workers, the civil servants, and so on. That means when they say taxes, I mean somebody is entitled to pay something back to the government. Because when the government constructs a road, when you buy a car, you must pay for using that road. That's the tax. When I don't know, have you heard something about ShopRite of recent? Huh?
Yes,
What have you heard from ShopRite?
they're leaving Uganda.
They're living in Uganda. Why do you think they're living in Uganda?
Taxes. High.
Taxes are high, no, so because they are investors, when they come to Uganda, they charge them the taxes. So that's how we look at taxation. So that it's part of business. So KCCA also charges people around Kampala and so on. So that means someone who is taxed. So someone who is what? Taxed must be working. Must be what? Working. Or must be employed. Must be what? Employed. Out there? So that means if you are employed, you are supposed to be taxed. Also, but there are some things people cater for. Out there? If you are employed, you are given some money. Also, isn't it?
Yes.
So how would they call the money they give you?
So, pardon?
When they give you money, how would we call that money? It's called salary.
Okay, sorry.
Have you heard of salary?
Yeah.
Now we have what you call salary. So that means there are some people who are called salary earners. Salary what?
Yeah.
Earners. Those ones earn a salary either per year or per what? Per month. So that means someone can be paid per month. Or someone can be paid per what? Per week, depends on the organization he was. Then per what? Per year. I think daddy and mommy are paid per month.
Yes.
So, but remember, there are some things they do that must run their lives. So someone may be paid maybe 600,000. Or maybe 6 million, depends. But in Uganda, it is rare. The minimum average earners in Uganda is around 300,000, the minimum or the average. The what?
Yeah.
Average payment is around 300. By the way, some people have been paid 150 shillings in a month. Some even 100. Okay. Now, when someone is paid salary, the government will charge him every after a year. Every after what? Yeah. So normally when they read the budget, you know what do they read the budget? When do they when do they read the budget? The budget, when do they read it?
Is it June? Yeah.
Around June and so. So between June, maybe it is June 2020 and so, to the next of June or July, around there, of 2021. So this is a full year now. This is a full what? Full year. So when you pay taxes between June, they will charge you again in what? In the next year. So it will be a full what? A full year. But remember, a year has 12 what? 12 months. So, so when you are given a salary, so this is what the government will charge you every after what? A year. But Yes, the salary you have, what we call the income. So it can be either monthly income or gross what? Income. What we call per annum. Per annum means a year. Then per month, that is monthly. Now, we shall subtract or deduct in every expense. Just deduct all expenses someone encounters for. So that means if I'm to look at now your daddy's status, I will say your daddy has to pay for the insurance of his family. So the insurance is an expense. Then also he caters for the transport. He drives his car. So that means you must put fuel there. Fuel is an expense. So transport is an expense. But remember, you also must eat food at home, no? So food expense. So food is also an expense, or what you call eating. Then security is an expense. Security is what? An expense. What do you think is another expense? Which other expenses do you know? Where do you sleep? At home, no? So?
Pardon?
Where do you sleep? At home, no? So?
Yes.
But remember, you rent, and so that is the rent expense.
Yeah.
So rent is an expense. So transport, water. Do you pay for the water? Yes. Water expense is also there. And so on and so on. So, but as a school, because now companies, let us say it's a school now. Let us say the company is a school. Over there?
Yes.
That means this school will cater for some of these expenses. That means it will give what you call allowances. It gives the allowances to his employees. The what? Employees. That means either it will give insurance, it will give transport, either food, security, rent, and all those. But sometimes they will cater these because they may not give you directly cash at hand. They may give you, if you're paying maybe 600,000 per month, they will give you another 100,000 for the what? For the expenses. Or they may just cater at once. Are we there?
Yes.
So meaning this is what we call the allowances someone must cater for. So that means before government, suppose I don't know if you have heard people complaining a lot when they are paid via bank. They're paid via what? Bank. Someone is paid 800,000 at the workplace. So, but when he goes to check the amount which is there, he has the 600,000. What do you think has happened? They've taken almost 200,000 has gone on. So,
Yes.
But remember now, the government will charge us. They will tell you that NSSF has been taken. I don't know if you have heard of those things, of NSSF, Then they may tell you maybe tax has been taken. Smanyagun has been taken. All those things, So these are all expenses. Which now this is the charges taken by the government. NSSF, taxi, Smanyawati, all those things. So what the government charges people is this, is what we call taxable income. Taxable what? Income. This is the amount of money, amount of what? Of money that the government charges, that the government charges. Are we there? So that means you must subtract off every allowance which is there. So the rent, the what, all those are there. From your earnings, that means the salary you have. That means I will now come and say taxable income. I'll say taxable income is therefore, I'll say taxable income is therefore the salary or the monthly. We can either say the gross income or monthly income, depends on what you have. Monthly income minus the total allowances. The total allowances. Are we there?
Yes.
So that means when I say gross, this is per year. What you earn per year. And total allowance, this is per month. So it depends on what you are dealing with. Are you paid per year? Are you paid per month? Are you getting it?
Yes.
So this is what you have. Then after looking at this, the amount you will be getting is what you call the taxable what? Taxable income. So the government will charge you this amount depending on how much you earn. That means the more you earn, the more they will charge you. The less you earn, the less they will charge you. So if you look at those people who are in the arcades, you may think that they are suffering from taxes. That means for them they are paid high and they must be charged what? Highly. So every government has its own charge rate. So different governments, so different government or different countries, different countries have different charge rates. Charge what? Rates. When I say charge rate, it depends on how you charge people. Let me give an example of mobile money. Of mobile what? Mobile money, like MTN and Airtel. Do you think they have the same charges when they're going to withdraw? Do you think they have the same charges?
No.
No. You may find like, let me say I have MTN, I have what? Airtel. And so? If I'm going to withdraw around maybe 200,000 and also here 200,000, you may find that via MTN, the taxes which are there, they will charge me maybe 5%. But an Airtel, they may charge me 3%. So it's not the same. So they differ. You might find that maybe AfriSave is a bit less, maybe 1%. Depends. So that means every country will have a different charge rate of a given money. So that's how we shall look at. So let us get one example and we see how do we look at such questions. So example one. So let me come here. Let us look at now this is it. That is senior 4. You see is senior 4. You're now in senior 4 levels, no sir? Are you still in senior 3 now? Yeah, I thought you are in senior 3. It's in senior 4 level. So appreciate that. So we're looking at income tax. So this is all commercial what? When I say commercial arithmetic, this is all business mathematics. Currency, profit and loss, discount, commission, simple interest, compound, appreciation, higher purchase, all those. So let us look at this. 188, page 18. Okay, I think that.
Yes.
So I've said the income tax. This is the tax levied. When they say levied, what do they mean? Levied is what you collect from people. On people's income. And people's incomes, that means what you earn, you must give something to the government. It's like when we say, which example can I give you? Okay, let us continue. So income is paid, The income is a payment received by someone who gets involved by legal. When I say legal, what's legal? Legal means government things, eh? Eh? Legal gainful activity, including profit and loss, wages, all those, eh? So the gross income, I think this one, the gross income, the total income that an individual receives from the wages or salary. Wages, when I say a wage, what is a wage? Hmm? What do you think a wage is? Hmm?
A wage.
Hmm.
Maybe our wage is like the money that is got uh, out of. I'm not sure. I'm not sure.
Okay, when we say wages, it is just a payment, eh? But it's not direct like a salary or you are supposed to earn it. Eh? It's like some beneficial amount. Eh? So they normally say wages and salary. Eh? There's some people who get salary, which is maybe monthly, but wages can be weekly or daily. Are you getting it? Eh? Hmm? There's some people who are paid daily. Eh? Uh-huh. So receives wages or salary. So levy pay, overpay, like overtime pay. You know overtime pay? When you exceed the hours, eh? They give that extra benefit. Eh? So medical hours and so on. Mhm.
Teacher,
Yes.
I'm going to change my gadget.
Okay. So I'll wait for you.
Okay, so let's continue.
Okay. Uh-huh. So then we go to taxable income. This one we have seen also. So taxable income is the income on which the income tax is levied, and it is arrived by deducting from the gross income the amount of what? Allowances. So you have seen this formula also. So you make sure that you have this formula somewhere. Huh? How do you copy the formula?
Let me copy it.
Mhm. The formula is taxable income is equal to gross income minus allowances. What we call total allowances. So total means every expense you have encountered. Hmm? Mhm. So should we continue?
Yes.
Okay. Now we have an example there. I see that example. Mhm. So they've told us in a certain country, the income tax is levied as follows. So they've given us, they've not specified the country also. So we don't know which country. It can be either Uganda or Kenya or Rwanda, depends. Yeah. So
Yes.
the country is levied as follows. So that's it. A person's monthly gross income. When I say monthly, it means he earns per month. Also, per month. Hmm? So he's paid per what? Per month. Monthly gross income. Also. Uh-huh.
Yes.
So income or certain allowance has to be deducted off before subject to taxation. So before government charges you, you must remove all the allowances which are there. Huh? Uh-huh. So they've told us each child below 10 years gets 5,000. That means somebody has children also. So each child above 10 years but less than 18, 7,000. Married man, shillings 18,000. Transport allowance, shillings 17,000. Now look at the statement. David earns shillings 450 per month. I think now this is now the income he gets, a salary. Eh? How much is he paid per month? 450 per what? Per month. Uh-huh. He is married. That means he gets the marriage allowance also of 18,000. Hmm? Uh-huh. He has 3 children. That means he gets the children allowances. Eh? It's like, let me give you, uh-huh. Like, look, let me give an example of white angels. Eh? Hmm?
Mm.
White angels, if you are an employee of white angels, they allow either 2 of your children or 1 of your children to study for free. I don't know if you know that.
Yes, I.
Uh-huh. That means they will allow your children to study for free if it is either one person or there are two. I mean, that's the allowance they are giving you. Now, but this one is giving either, they've given us each below 10 and between that. Eh? So he has 3 children between 2. So between 2 years and 10 years. Eh? So he has 3 children between that. Eh? And 2 children above 12 what? 12 years. But now they have not specified how many children here. So that means all children are going to be K34. Are we there? So then we continue. So the first question is, calculate the taxable income of David. Over there. The taxable income of what? Of David. The next one is what? The income tax, he paid. If the rates are, so they're giving us the rates. So,
Yes.
So should we continue?
Yes.
So we went ahead. Now, the first thing we look for is the allowances. We will look for David is what? Allowances. Now, they told us David is married, no? So from above statement here. Yeah? David is what? Is married. Yeah? That means he gets the marriage allowance. Not so? That means you come here and say marriage allowance 18,000. Yeah? That's one thing. Transport allowance is given. Also, it is here. 70,000. But now, remember, he has 3 children. 3 children of which age? 2 and what? 10. That means which age, which sector they are belonging here? They're belonging in this sector here. So, they are below 10. Are they below 10? So they are below 10. Very good. They're below 10. So you multiply by what? There are 3 of them. So you multiply by 5,000. So then you say 3 children, 3 times 5, we get 50. Then he has 2 children above what? Above 12 years, but less than 18. That means someone who's above 18 is not K34. Have you got that statement there? That means suppose he had a child of 23 years. That means that child not K34 because is ready to be mature enough. In Uganda, if you are 18 years and above, you are mature, you must reason properly. So that means so when you grow up, you don't ask for mommy for clothes again. You struggle and look for money and buy your own clothes. When you clock 25 years, don't ask for clothes. Mommy, I need a clothes. No, you must work for clothes. Very good. So now we have seen all this. So this is all the allowances David has. So marriage is one of them, transport, children, and that. Then we shall add the total allowances. Are we there? So giving us 64,000. Are you seeing 64,000? But remember, we are doing monthly. We're doing per what? Per month. But if it was per year, we could multiply by what? By 12. Not so? So then we come. Therefore, taxable income, we say taxable income is equal to the income. Now, this is the monthly income minus the allowances per month, because everything here is per month. Are we there? So we shall get 450,000 minus 64 what? 1,000, giving us 386,000. So this is what the government will charge. Are we there? So the government will charge that money there. So coming back now to here, I think this statement, which is your taxable income, the rate.
Yes.
They're giving us the rate of that. So by seeing that rate there in yellow.
Yes.
They've said 0 to 100, 10%. Of that. Then from 101 to 200, 20%. From 201 to 300, 30%. From 301 to 400, 45%. From 400 and above is 50%. But I have a question. What is our taxable income that we got? It was 386. Answer?
Yes.
That means, does it reach 400? No. Answer? Does it reach 400? No. Answer?
No.
So that means we shall not reach 400. We shall say this amount minus the 300. But looking at all this, the difference in the amount of money we have here is 100, 100, 100. If you subtract, so we shall say 100 minus 0. Now here we shall ignore the 1. I think this one here of 101.
Pardon?
I think this one of 101.
Yes.
So we shall ignore the 1 because it's like we are counting from the first note to the last note. So that's how we look at. So let us look at how do we calculate this. So that means the first 100 multiplied by 10%. The next 100, 20%. The next 100, 30%. Now the other one is 86. Why are we using 86? Because we are using 300 minus the 200.
Okay. Yes.
So that means that's why we had this. So it's like we're having something like this. Remember, we had 386,000 also as our taxable what? Taxable income. But the charge rate was what? The charge rate was as follows also. From 0 to 100 also, they were charging us 10% also. Then from 101, so we shall ignore this one because like we're reading from the first note to 200. So our charge was 20% also. Then from 201 to 300, our charge rate was 30%. Then from 301 to 400, our charge rate was what? Was it 45? It was 45, no, so charge rate here 45.
Yes.
So 45, so 45%. Then from 400 and 1 and above, they're charging us 50 what? Percent. But look at the amount we have. We have 380 what? 86. So that means this amount of money qualifies for the first 100, qualifies for the next 100, for the third 100, for this, but doesn't reach here. And so, because it is not above, it is not what? Above. Therefore, the charge rate will be as follows. What the government will charge you. So the government will say the first charge. So first charge will be, now it will be this. So you shall say 100,000 minus 0 times 10%. Then the second charge will be 200,000 minus 100,000. Now we shall ignore the 1. I said ignore the 1. It's like the first note. Now times what? Times 20%. And so?
Yes.
Then the next one, the third charge will be 300,000. Now, I think this one, 3,000 minus 200 minus, okay, minus 200,000. So charging us 30%. And so? Now the fourth one, does it exceed this? No. Remember, it is 386,000. And so? So we shall say that the fourth charge, because the amount of money doesn't reach 400, therefore it will be 386,000 minus 300,000 times now 45%. Have you seen it? Have you got that concept?
Yes.
So, but remember when I say 10%, it's 10 out of 100 and so. But when I look at the difference here, the difference is 100, difference is 100, difference is 100. Yeah. Then after we shall add them. So therefore, so the first charge. So first charge will be 100,000 times 10 out of 100. No, so what do you get? These ones will cancel. So you're getting what? 10,000. Then the second charge, the difference is also still 100. No, so it will be 100,000 times 20 what? 20%. So this one will cancel. We are getting 20,000 also. So I think now the money is increasing. Yeah, that means the more you earn, the more they charge you. So the third charge will be 30%. So that is 100,000. The difference is 100,000 times 30% out of 100. So this one will cancel. So giving us what? 30,000. Are we there? Now the fourth charge. The fourth charge will be, so the fourth charge is also 100,000. Are you sure it is how much? Fourth charge. When you subtract this to, what do you get? When you subtract these two. What do you get? You get 86. Yes, Praise, are you there?
Yes.
So we shall get 86,000 also.
Yes.
So times what? 45 out of 100. What do you get? What do you get? What do you get? Yes.
Teacher,
Yeah.
you get 38,000.
38,000. 700.
Yes.
Okay. Now, after getting these charges, we shall add. So we shall add this. So plus that, plus that, plus that. Then we add. What do you get when you add? This one is 30,000. 30, that is 60. 60, that is 98. 700. Yes.
It's 9,000.
700 also. So this is what the government takes from you, from him. Okay. So that means when he's paid, maybe let me say he's paid 600 in the bank, the government will charge you this. So that means for him he's paid per month what? For 50,000 also. That means the amount he will receive, what we call the total net income. So we shall go to the next chapter. So total net income is therefore, so total net income. When I say net income, is what you have got, what you call your money, what you save. Have you seen it? What you save, the net income. So that means the net income now will be Now, what you have earning, the monthly payment, the monthly income, minus now the what? The tax, which you call the income what? Income tax. And so that means it was 450,000 minus what is being charged, which is 98,700. So what does he earn? What is his net income?